Yeah, can you hear me?
Yes, we can.
Yep, loud and clear.
Great. So when you see there are a lot of buyers in the market, you see a candle like this. When there are a lot of sellers, you see a candle like this, right? And then there are equations where like you
Excuse
see,
me.
yeah,
Can you start from the beginning? I think you were not audible at all before. You're just
yeah.
audible now.
Actually, this is the beginning, and I have been repeating the same thing since like the last five
Okay.
sentences.
All right.
Yeah. So this is how basically the candlestick pattern works, or is being formed, right? So basically, the candle that you see here was a candle like this at the start, right? So this is a daily chart, but when you go on a 15 minutes or 5 minutes time frame, you'd be able to see that this particular candle was something like this at the start of the day, right? So it opened here, which is whatever 1568, and went until there. The sellers pushed the price down, and it closed below its open. So this candle formed. The reason I'm saying is this because it's very important to understand how the candle is forming rather than just what is the candle about, right? So although you cannot take a decision based on just looking at the candlestick, so there are two things here, which is what is happening and where it is happening, right? And because of course we do not trade things in a void, we always look for some context in the market, right? Which is of course when you see this kind of candle at support, which means that okay, there are still buyers dominating, sorry, sellers dominating, and there is a possibility that the price might get pushed from there, right? Rather than seeing this candle at the ATH, where you will have a different conclusion or based on whatever the volume is basically. Let's come back to the original point that this candle was something like this while at the start of the day. And which day is it? 29th December. Yeah. Yeah. So this is 15 minutes. Let's look at 30 minutes. So here you see that the opening candle itself was, this is 11:15. Yeah, this is 9:15. So here you can see that the opening, it kind of opened gapped up, and you see good buying, and people are very keen on buying this particular stock, and they, until this moment, which is 10:45 for 1.5 hours, you see the price is an up move. It broke above the support but couldn't sustain, and the next moment itself, you see there's a huge red candle with huge volume, which is just pushing the price down, and this kind of like nullifies the previous candle, right? So this is basically a white bordered candle with at resistance, not at resistance, like above resistance. So this breakout basically becomes a fake out, and that's the reason we do not look at like smaller time frame, right? But yeah, so I moved here just to explain that the at the earlier part of the day, the candle would look something extremely bullish like this if you combine all these candles here. But at the end of the day, you see something like this, where the sellers came in and started pushing the price down. Now, here there are two things. First is, as I mentioned, what is happening, which is, let's go back to the daily time frame. So what is happening is basically we see a lot of selling pressure here, but the volume is not super supportive, which means that although they are sellers, but it's still holding this support. Although I won't call it the support, so let's look at from the future point of view, where this candle is just forming and this part of the chart is not there, right? So your immediate support would be something around this level, right? And it's above support, and I mean it's important for the next concept basically, which I'll coming to. So here you can see that temporarily we also consider the previous candles low and the previous candles high as decent reference point in order to judge the direction of the market, right? So here, as you can see, there's a huge breakout that happened at the early part of the day, which we just saw in 30 minutes time frame. But after that, the sellers came in, started pushing the price down, but they're not able to break the previous candle's low, which is this one, right? Although this can happen at the early part of the day or the later part of the day, which you're not aware of, but they're not able to break this particular low, right? Although this is breaking the low is not super important, but this is of course we use as a reference point. So coming back to the previous point, that okay, so we saw this candle, and the candle has okayish volume, like it has a decent volume. But before this candle, always look for candle which is having volume greater than this. Let's say in the near vicinity, if this candle has the highest volume, then this candle becomes super important as compared to all of the candles which is there here. So in the near vicinity, so this part of the chart is not there. So if we take this candle as a reference, which is having highest volume among these, or among within, let's say, like 1 month time period, then the overall trend of the market is being judged by this particular volume rather than this particular candle rather than this candle, right? And here this candle also becomes a reference candle for plotting the support and resistance, which is essentially the next concept that I'm coming to, right? So, which is basically the candlestick pattern, right? So here, I personally use white-bodied candle as a huge reference point, no matter what is the volume there, before taking a trade, right? So this can be also be referred as like an inside candle theory or whatever, but I do not call it that. So whatever price action is happening inside this particular candle, as long as this low is not taken out, I would call this trend to be super bullish. Right? So after this candle is formed, or any white bodied candle is formed, you can basically plot two lines here, which is one is this, second is here. So you can ignore the wicks. You can just take into consideration the body. Also, this is only valid on the white bodied candle, not on this kind of candle where this range itself is super low, right? So here, as you can see that this had some like choppy move here before giving an up move. But as long as the price stays above this candle's this closing, I would call the trend to be bullish, and I would continue to hold this trade until this low is taken out. So if I see a white-bodied candle, this automatically becomes my support as opposed to the original support. I'm coming to the original support and resistance, but since we're on the candlestick pattern and the candlestick, I just thought this is a good explanation. So this is valid for all candles, right? So this candle was formed on 23rd of December, but there might be candles which are forming after that as well, white-bodied candle particularly, and those candles may or may not have similar body to wick ratio, but they should be at least have some body, right? So right after this we see this candle, right? So here I mean although we can although I'm plotting it manually, but you can just do this mentally once you are like good enough that okay, so here there's a support, and I try to close above the support for 2 or 3 days, try to stay below this, right? But which means the trend has some possibility of becoming bearish. But overall, looking at this candle, which was our earlier reference, this trend is still bullish, but in the short term, this is become bearish. Taking into consideration this particular candle. So here I can go short once this particular low of this candle is taken out, which is here, and I can take into consideration my whatever percentage I have, which is 1 to 2% on a daily basis if it's intraday trade, or 5 to 10% if it's like swing trade. But if you take into consideration here, so let's draw this anyway, right? So after the after this move, which was 2 or 3 days, you can see that the buyers started coming in and started like pushing the price up after this candles. I mean, sorry, above this candles, this low, right? So again, now this candle becomes our reference point, wherein as long as our price stays above this, which is this low, our trend becomes bullish, and as long as it stays above this, it is like 80 to 90% bullish, right? And you can take the same thing as a reference. Let's draw another line here, that whenever you see this candle, although this candle has a huge upper wick and it shows that there's a lot of selling pressure, but our trend is still bullish, and I'm not going to exit my position until this low is taken out. So this is on a short-term time period, but over a long-term time period, I am still referring to this candle depending on your risk to reward ratio, right? So this is having a huge body, which is like high is 1630, 1430, 200 rupees. So yeah, so this is like huge. So for time you can ignore this, but just for the sake of example, Yeah, I mean, consider this. Yeah. So let's keep on moving to new candles, right? So which are only white bodied. So this is rejected. So this is having smaller bodies compared to all of the candles. And we can use this candle wherein we can see that, okay, this is having a decent wick to body ratio. And let's use this. So here, let's delete this part. Since we're using this candle, right? So here, so what happens in this candle, right? As I explained at the very start, the forming of the candlestick itself, the price opened here, it never went above this. This is open equals to high, and the seller started coming in, pushing the price down, and brought it until this level. I don't know what is there, is like some candles high or whatever, but just for the sake of this candle, like this has a huge selling pressure and having a white body. And as long as my price stays below this level, which is here, my trend is always bearish. And I can take into consideration, I can draw new support lines or resistance lines based on the previous, like whatever price action, and take the trades from here until whichever is the support region, which is here, right? So and of course, as you can see, the whichever the price was coming here was also respecting this candle's low, since it is also white body. This is also respecting this candle's low, whichever is there. So here this candle basically indicates the price opened here, closed here, and this candle indicates price opened here, closed here. So basically I can sell here until here, which is my target, and keep the stop loss as this candle's high, right? So you can also take into consideration the previous candle's high, which is okay. But just to be sure, like my trend is bearish as long as it stays below this, because it will take a significant amount of buying or buyers to push the price above this, just because you can see that there are no buyers here, or the buyers were not able to control this move at all, right? Because emphasis or whatever stock you take into place, the consideration, you will see that they're always buyers and sellers, which means that either the buyers were absent from the market on that particular day, or they're not able to uh, like restrict the sellers from pushing the price down. So this becomes an important resistance area, not overall, but generally speaking. And you can see that the move has been very choppy, and it took a while for this to basically close above this. You can see it's taking some resistance here, and even here you can see some breakouts. You can of course go long once this high is taken out, right, which is here. And as long as this is broken, you can go long until whichever is the next candle's uh, uh, high. Yeah. And I think this becomes more apparent when you look at here, like whenever the trend or the price has been closing below this, the trend has always been bearish. Like here you can see that the next day it's like super bearish right here. And one more thing to consider is that the stock has not been able to push the price up, so it's been trading in this zone. So this can be basically called as a resistance zone. It's not able to close above this or sustain above this level since a while, which is not a huge level, only 40-45 points. So this becomes a new resistance zone, and until the stock gives a breakout from here and still sustains over it for, let's say, on a weekly closing or whatever. So yeah, so one more thing, I know I'm just mixing a lot of concepts here, but we always start with the weekly time frame and then go on to a smaller time frame. So after weekly, you go to daily and then analyze. But just since this was open, I thought it makes sense to explain here. So yeah, as long as the stock is giving a closing on a weekly time frame above this candle, which means that my uh, probability of this trade hitting my whatever the target becomes high, as opposed to the daily time frame, right? Which doesn't negate the fact that if it closes above this resistance area on a daily time frame, the trend is not bullish. It means that the trend can still be bearish, because looking at the past price action, it closed above this, but sellers started coming and push the price down. Same thing happened over multiple times. So one thing to note here is, the more the number of times a sellers hit one particular supply zone, the stronger the supply zone becomes and the weaker the stock becomes, right? So let's say if this movement happens couple of more times, or is ranging between this area for a few more times, then the stock will like loosen its strength and will start to fall. And once you break this level, then your next target will definitely be here, which is the next pivot point. And after that, it's here, right? So I hope this concept is clear, and we can take few more examples, which I think would be very interesting to see, because I'm not sure how you guys interpret this, but I've been like testing this for a while. Like I've looked around 300 plus charts, and it has given good results so far. So I don't know which.
One second, before you go ahead,
Yeah.
can you repeat the thing about that supply zone which you said? When sellers hit the supply zone, market becomes more bearish.
So there are two zones, which is supply and demand. Supply is when the sellers started coming in and pushing the price down, or just booking profits, if you want to put it simply. Which means that the more the number of times a stock is hitting its supply zone, the weaker the stock becomes. Right. Which means that the buyers are not able to take the baton away from the sellers, and the market or the stock price is still in the hold of the sellers. Right. I hope that makes sense.
Yeah.
And the same is the case with the support as well. And that's exactly how the support forms, right? So if you invert the chart here, and if you treat this thing as a support, now let's look at something else. Yeah, let's come here, right? So if you see this right here, let's clear this. Right, so here you can see the number of times the stock is coming here and not able to break this, which means every time the stock is coming here, the buyers were stepping in. So here, the first time is here, this price went down here. The buyers came in after 2 days itself, pushed the price up. Same thing, white botted candle came down. Still the stock was able to retain this particular level. So which means the longer, the more the number of times stock is testing a particular support, the stronger the support becomes. And the same is the case with the resistance, right? So now it will take a lot of time for the sellers to basically push the price down, because after a while the selling tendency will get smaller, and they would just not think of like selling here, and they will start buying basically. Yeah, I mean that's not a very good way to put it, but a good analogy would be basically like if you want to buy milk from a particular store, let's say out of the 10 times if you visit the store, 8 times it is closed, the probability of visiting it this 2 other times greatly reduces, and you'll try going to some other store, right? So the same applies here also, where the sellers are there here, and they see a lot of times that they're not able to break this. Then of course it basically implies that the buyers are in control here, and we can expect a breakout, right? And this support zone becomes very strong, which means that whenever the stock is falling, it's going to at least consolidate here for a very good amount of time before breaking. And when it breaks this particular level, the move that going to happen, or the fall that's going to happen, will also be very significant. Just because all the buyers who are here present here will start diluting their positions, right? So yeah, this is the concept of basically the support and resistance area.
But
Yeah.
as you said that if the support
Speaker.
is broken and then the market will fall sharply, but in this case the market has gone up. So how do you decide, like before this thing is printed, that you should go long or short from here when a support resistance is tested multiple times?
That depends on multiple things basically. So, which we'll be learning in like next few minutes, right?
All right, sorry.
Yeah. So this is the only concept of support and resistance. And next thing is of course the support and resistance zone, right? So here, if you see a lot of wicks here, which is okay. There's still not a lot, but I mean, yeah, it makes no sense to draw a support zone here. So it's just support line. Let's look at some other stock. Voltas, okay. So immediately you can see that looking at the broad, let's go on weekly actually. So going on weekly does two things. One is it reduces a lot of noise in the chart. Secondly, it gives you better entry signals, or it increases your probability of basically making more money, or just improving your probability of hitting success rate more. So here, as you can see, like this is the basically the support or supply area, so resistance zone. And here the number of times the stock has taken this, or let's consider this as another, right? So here, the number of times the stock has taken like resistance, it has always fallen, right? Which means the sellers are always dominant here, and buyers are not able to push the price up until this candle. So this price action is from 26 December, excuse me, until 9 September. right? So it's almost a year where it was consolidating in this range and not able to break either of the resistance or the support. Yeah. So here, once this thing got broken out, and this is what you're seeing in a weekly time frame, which is more accurate, which means the trend is about to change here, right? And after this, you can see that like whichever is the move from here, 647 to 723, it consolidated for another period of time from whichever 23rd September till another, I would say 6 months, 6 7 months, right? Which means that this becomes a good supply zone, which means that although the buyers were dominant here and was able to push the price up from here to here, but there were still sellers present in the market who were not able to basically. I think this is also when the COVID happened, but I'm ignoring the fact just for the sake of the explanation that there were still sellers present in this particular zone before allowing the stock to basically close above this. And you can see that from here to here, like from this particular region, basically, another time. Every time the stock wanted to break above this level, which was not formed. Let's say when you're looking at this, when the price is trading on 6 Jan, right? This is a weekly time frame, but let's assume 6 Jan itself. Then this becomes your support, looking at the previous price action right here, and you would go long ideally here. Let's draw it anywhere. This. So you are trading on 6th of January. You see that okay, it is trading above the support and good white bodied candle. So I'm like very bullish on the stock, and my next target would be right here, right? And let's say once the candle closes above this level, which is the resistance level, then you basically move your stop loss to this candle's low right here, and you keep trailing your position, right? But what happened right after it hit this level, right? The next day itself, this came in and started pushing the price down, and this is the trend across the 6 7 months time frame, and until they were able to break this level, right? So once this broke this level again, which means that whatever support that was built over the 6 months time frame got right after you see this gap of candle. Of course, this is not an accurate description because of COVID, but I hope you get the idea. And now once the support is taken out, right, the fall whichever we'll see will be very like sharp in terms of the fall, right? Because the buyers lost control here and sellers were more dominant. So this is essentially whichever, as you can call it, the concept of support and resistance. Now here we can draw a good support zone, which is more accurate, a support line. The reason being, let's say if you, of course, this is happening in hindsight, and let's say price is trading somewhere here, right? So now this support zone becomes more important, and it will save you from these entries just because you have drawn a support zone, right? So support zone here helps you basically play a bit more safe as opposed to support lines because of all these wicks, which means that price was at this level, above this level at some point, and it's not able to sustain that, which means the buyers could have started coming in here or here or here, anywhere, but they're not able to sustain above this level. That's the importance of zone, and that's the reason you wait until this zone is broken before going long in the future, right? So you draw the zone, let's say when the price is trading here or anywhere here, and you can see that how much resistance it is taking at this particular level before breaking out. And when it's breaking out, and whenever a stock breaks out of a particular zone, the zone becomes a good support also. I think that's very obvious. And it would need a decent amount of buying volume before breaking out. I think this is very visible in another stock which I traded, which is Hale, basically. So right here. So here, as you can see, that this particular level. So I think this is here to here move was very predictable, basically, which will come to because of RSI, but which we'll see a bit later. But from here to here, when you see this particular candle, I think a lot of people got trapped right here just because they see that the closing is above this particular resistance line. But there was this wick also, which was kind of dominating or present there, just like silently sitting there, waiting for people to buy or whatever. And this was one of the reasons. So if you drew this thing before, like this particular zone, you would be safe from this particular candle because it didn't completely break out of this level. Although you see that there's some good bullish pressure, and you can see, and then our original concept of this white bodied candle come into place. As long as the stock stays above this particular point, which is also near to very the support, my trend is still bullish. So I can keep buying here in this candle or in this candle, no matter what is the wick or how the candle looks, just because I'm sure that this is a white bodied candle, a lot of people bought it, and the trend is bullish, right? So I can still buy here until the support is taken out. Not exactly support, but the slow of the candle is taken out. And I'll just to be on the safer side, you can go long once this zone is broken, which is right here. And of course, this you can check on the daily time frame. So analysis, whichever we do, is on a weekly time frame, and the trading that we do, the positions that we take, is kind of on a daily time frame, right? So this analysis, you can see that okay, like a lot of people, we see a lot of like buying volume here. So this candle is very bearish, but going on the first Feb, right? So let's go to first Feb. First Feb right here. So when did it stop? Moment. This is 8th Feb. Okay. So first Feb until this movement is happening over 1 week, and after that you are getting this particular movement. So here you'll be very tempted to go long, and I think I actually wouldn't blame you if you go long here with a decent stop loss. But stop loss would be, of course, this candle's low, which is here. So 39.44, whichever it's. I think it's like the risk reward is worth it in this case, just because our target is like 57 actually. Given this is a good breakout, and this is happening at the end of the week. So overall candle, if you look at, it's like super bullish candle. So I'm pretty sure a lot of people have gone long here, but I personally like went short at this particular level at around 315 itself, just because that was a support zone, sorry, resistance zone. And actually, this also coincided with their earnings day, but I was not aware of that until taking the trade. And I think they underreported or whatever, but the stock fell down, and I booked out this particular day. I didn't like wait until this because this was a support zone, sorry, support line, and I booked out here. So that's how basically you got saved from these particular like endpoints wherein like either you do not know where the price will move or you want more certainty in your trading or whatever, right? So I hope this concept is clear about support zones and resistance zones. So this is what we saw as a resistance zone, but I think same is applicable for support zones. So this is what you can call it as a support zone right here, wherein like you can see there's some consolidation happening right here, and it's breaking out from here, and whenever it's breaking out, the volume is good, candle is white bodied, and it's basically like overshadowing all these candles together. So basically this candle sets the mood for the entire up move, and as I explained the concept of candle, like white bodied candle, as long as the price stayed above this, my trend has always been bullish. So I can treat this as my stop loss and keep going long. So you can see there was some like problem here in terms of this. Not problem, I mean, your stop loss might have got triggered, and that happens often. But overall, speaking of the trend, it never closed below this particular level. Yeah, right here. And you can keep extending your trailing your whichever stop loss with every white bodied candle. So this is not a candle which I would call as a white bodied, neither this one, a huge wick. You can treat this basically, yeah. But you can also consider this as your uh, support or just stop loss. I would rather call it because there's not really support. And you can see like this did not break, although this broke, but this thing, whichever price action is happening, it's happening within this candle. And of course, there's a weekly candle which is very important. Don't come to me and say that, okay, this is happening on a daily candle and the price broke below this. So it is more valid if you look at monthly candle or weekly candle. Higher the time frame, always better. Yeah. And I was not able to break this, which means that my trend is still like bullish. And of course, this is already retained, this is retained, and then you move on to this one right here. So this is the next stop loss, and you can see that this candle came until this. Just keep a little below this, or use this next support as your actual stop loss. But keep a trigger value or from Sentinel or whichever platform you use. So just keep tracking here what's happening when it's coming here. And my trend is still bullish as long as it's staying above this level, which is 43.6. Now you see another white bordered candle. You move your next stop loss right here, 40.10, and this is another your 47.5. So what happens is that whenever a stock breaks this closing, which is 47.5 or 6, then you should start watching out for your next actual support zone rather than the candles closing or open, right? And as long as it's trading within this candle, you can be sure that okay, the trend is still bullish, keeping this as a stop loss. And I think I'm plotting this manually, but this would come to you as I mentioned very clearly if you just look at it virtually. Like okay, this is a retain right here, it came here, but this is still above my within my candle, and the same thing right here. So the trend is very solid up move. Yeah. And right here, so this candle I would consider for using as either stop loss or my target. So here, although it is coming falling within this, but my actual support, or not exactly support, sorry, again, my next stop loss would be like right here. Or I would start watching the stock when it breaks this level until here. Yeah. And I would start wrapping up my positions if it breaks here, or I see a possibility in the price action that the trend is turning, and I'll start booking my positions right here. So I think this is very simple stuff, but it's actually very powerful in terms of how you trade and what you trade. And it will save you a lot of time in terms of basically just looking at the price action. So this should also be used, always be used in combination with the actual support and resistance. So let's delete this stuff. So this is what is your actual like support right here, right? Like earlier resistance, now support. So this is the actual support that you should be looking at. This is a support zone which you should be looking at, but just keep the candle like white border candle as a reference point while booking out, and it will work out in a favor most of the times. Yeah. But don't ignore the support and resistance zones or lines because they are like they take a upper hand as compared to these candles, right? Because these zones are formed with the culmination of multiple candles as opposed to just one candle. So these are more important as compared to anything else. Yeah. So yeah, I think the same concept can be visible here as well, where if you consider this candle, white border candle, like draw one level here, right here. Yeah. So once, so this price action, whenever it was falling, the trend was still bullish until this. Once it broke this level again, it was, I don't know, it was not COVID time, but close to it. So yeah, so once it broke this, the trend permanently changed, and you can just find the next support area wherever it is. Right. I don't see any support area here. I think yeah. So I mean, you can use FIPS in that case, but yeah. So yeah, the trend permanently changed after it broke this particular candle's low right here. And here you can see the resistance line or the resistance zone also coincides with this candle's low, and it was not able to break this resistance for a significant amount of time, almost like 1.5 years right here. And once it broke this, then there was a possibility of trend changing right here, right? So you can go along right here on a daily time frame until this candle's high or the closing, right? So again, this is super interesting where you can see that okay, the close like it is not able to break this particular candle's close, which means that the trend is still bullish as long as it's staying between this levels. And so you can keep holding your positions if you are like a swing trader or short-term investor, unless unless the stock is holding this level. But as long as the stock breaks out of here and closes above this on a weekly basis, your stock will move into another zone where you can basically target the next support area, next resistance area, which is 74.15 right here. So in this case, I think whichever candle breaks out of here, it's like the candle will be super bullish, and it will take a significant amount of volume also to break this, because this entire thing is happening on a weekly time frame. So here again, coming to the whiteboarding thing here as well. So this, I think the week has not finished yet. So I'm not sure about this candle, how it will look like at the end of the week. But just looking at this, next price action, whichever might happen between this candle itself, retaining this one right here, this candle slow. Although this is not quite bodied, but I'm just still like considering. And to break this level now, because this was open close to high almost, it will take a significant amount of buying pressure or the buying volume to break this level. So this zone becomes more and more important. This resistance zone, supply zone becomes more and more important because you can see the amount of sellers or selling pressure which is happening right here. Which brings me to the next concept of options, basically. Right. So if you want to YOLO, you can basically buy or sell basically 56 or just 2 rupees above this 58 call, and just for the weekly expiry, or not weekly, the monthly expiry in case of stocks, and book out like good amount of profit every time it hits this level, right? And this is very like straightforward in the case if you have plotted these things properly, and if you have plotted these things with like good DD, basically. Yeah. So here, basically, this also covers a bit of the options part where you can use this to either buy put or whatever, given how strong you consider this resistance zone to be. So this is the zone which I plotted based on this three candles. But if you look at the previous thing here, you can see there's a lot of like noise right here as well, right? Which means that sellers are also present in this zone until 58. So 58 would be a more safer thing to take in terms of shorting on option or buying a put, rather than 56 where you still have a possibility of losing money if you're looking for a weekly expiry. So yeah, I think I hope this thing is clear, but let's go to weekly, right? Sorry, daily time frame. So daily, I think whichever thing was happening, sorry, okay, let's clear it out. So on a daily time frame, also now you can see that okay, these are the levels that are plotted, and as long as the stock stays above this level, I'm very bullish on the stock. Which means now you can sell put here or whatever by call, as long as this is of course the lower end of the candle. So you can be very, if you're sure that okay, there's a good support area, then and you're bullish on the stock, the price action looks good, then you can keep buying things here and making small profits as long as the stock is trading above this level. But do not do this if the stock breaks this particular close of the weekly candle, because there's a possibility of the trend reversal, and you would not know when the trend is reversing because it's very sudden. So with YOLOing, you also have to have some discipline in place before you can take such trades. But of course, it's possible, and I think it's very easy. Just that you need to know support and resistance areas. So I think this thing is applicable and visible across every stock almost, like whichever you take. So Maruti I traded recently is like a very beautiful setup that they have. So this 7200 is like a very important zone, right? So this right here for itself, right here. So 7200 is like a very important zone, above which the polarity of the stock itself will change, which means that if the stock is in the bullish trend, it will move massively up, turn into bearish, or the inverse. Yeah. So as you can see, how choppy was the move right before. Of course, this I'm checking on a daily. Let's go to weekly. So again, bringing the old concept itself of white body candle, you can see that as long as the stock was below this, it was super bearish, and it was not able to break this after it broke for the first time. Like it was 22nd Feb. So until this level, it is not able to break 5th March. Like for entire like 2 or 3 weeks, it was bearish, and it still continued shorting until as long as staying below this, which also coincides with the actual supply zone right here, which means that every time there were buyers which came in, like there's a super whiteboard candle, which means there's a huge buying volume. Plus, it capped up on this week, sorry, this day. Still, it is not able to break this, and the sellers start coming in, right? So, where do you go short in this case? You can go short once you see this candle, which is a doji candle, but I treat it as a neutral candle, which is not a reversal candle actually. But you can go short here, which means that although you can see, okay, there's a possibility of trend reversing right here since the day, since it's closing above this. But you can see also taking into consideration the previous white-bodied candle, this also coincides with this particular candle's open, which is open equals to high, and it was not able to break above this. So although this is a gamble, but this is a gamble with a very good probability, which means it is almost at the supply zone at the resistance, and you can take a short side trade here. And here, when you take a short side trade, your premiums would be super high. And when the falls start coming next day, you'll make a lot of money, basically. So easily you can look at 50 to 60% returns in one day. And if you want to wait it out, you can always like aim for 100% returns right here, which means that you have these things plotted properly. You're very confident of your trade, which means that you see that price action. However, it is moving, it is still in your favor, and you have a good risk to reward ratio, which is, I mean, okay for me. Like I look for ones to three or ones to five, but people might look at ones to one as well, and that's still okay. So, any questions until here or anything that needs clarification?
How do you create these support or resistance zones?
So you go to weekly or a monthly time frame, and you look at the candles, which is where the candles, where the maximum number of candles are basically hitting at one place, right? I think this is also clarified by Lumia Man, but I'm just saying, sharing again. So, so this is one level, right? Right here. And this is another. Now between this becomes your zone. This is what we call as a zone, right? So you can see there's a lot of like choppy movement happening here, and the stock is moving here, like breaking out of here. So, but whatever breakout that's happening right here after this particular zone, a particular line, it's a fake out kind of. And every time it's hitting closing above this, it's not able to cross this, which basically makes it a zone. And same applies when it's taking support here, right? So although it broke this particular level on a weekly time frame, but the buyers started coming in and start pushing the price up, which means that this zone becomes super important right here. So does that answer the question?
Yes, thank you.
So yeah, I think this is what I use and what I had right here. So talking about, I think this kind of also like covered multi time frame analysis, which I wrote. So since you're analyzing the weekly time frame, you can see that you can go into the daily time frame and see that how the price action looks like. So this is of course a weekly, but let's try. So this is a white bodied candle that we have right here. Now let's go to daily. Right. So yeah, you can see that as long as my this thing is not taken out the low of this candle, my trend is still like preserved. And actually, the case is separate when it comes to both bearish and bullish candle, green or red candle. So in terms of the red candles, your trend overall trend is bearish, which means you should be watchful of taking the trades here, right here, from here, the buy side trade, as opposed to the green candles where you should be watchful of taking a short side trade at the top of the closing of the candle. Although it might take a pullback or just fall for a very short while, but you would not be able to predict how much it will fall, right? So the same case here, like just wait until this is taken out or this is taken out. It is not super good way to trade here. Although you can sell options here if you're confident about this candle, and this candle is a very wide bodied candle. Let's say having 99% wick to body ratio, body to wick ratio. So here you can sell put options here, and you can see that you have made good money over a time frame of let's say 2 or 3 weeks wherever you used, until you see that okay this so yeah, this actually starts forming a support here, temporary support, I would call it. And once they start breaking, or you see that there's a possibility of breaking this, you can exit a position. But overall, over a 1 week time frame, you can comfortably sell here, right here, and make some money. Like not huge amount, maybe some money right here. Once you see some breakout here, there's not a breakout, but just some bullish candle right here at support. Is this clear, guys? Any questions?
So for supply zone, suppose the wide body candle is red, then it is a supply zone. It is green, then it is a support zone. Is that what you're saying?
Sorry, can you please repeat the question? I didn't get
Like,
that.
how do you identify the type of zone?
Type of zone, like so supply zone is essentially a resistance zone, right? So where the stock is taking resistance and it's not able to move ahead of that, which is right here, right? So this is what you can classify as a supply zone. Demand is basically where there's a lot of demand for the stock and where there's a lot of buying happening, right? Which you can consider as this area right here. So this is what you would call as a demand zone right here, where you can see that every time the stock is falling until this level, the buyers are stepping in and they're accumulating the stock. So this becomes a demand zone, which means that there's a demand for this stock, and this becomes a supply zone where the supply is in excess or supply is more than the demand, so the price is falling. Is this clear?
So the wide body candle is different from these zones.
I mean, I think both are independent concepts and both are not related actually.
Okay.
Yeah.
Could you elaborate anything maybe, about volume, significance of volume?
So yeah, volumes. Essentially, there are three types of volume which I use. First is basically an igniting volume, which basically ignites move in a new direction or continues an already like non-extended move, right? So, for example, uh, yeah, let's take this particular, or let's go somewhere else. Right? This is. mm, Yeah, let's use this. So here, this is what I would call as an igniting volume, which means that until here, the stock was in an uptrend and the trend was bullish. But from here, this particular candle ignited a move in a new direction, which is different from the current direction, which means it is also the move should be just starting off and not a move which has already happened, right? So so when you start seeing white bordered candle from a support, from a resistance area, or from this supply zone, which means the stock has a good possibility of falling a lot, as opposed to when you see that same thing on a demand zone, right? So if you have to plot support here, there's one, this is two, right? So although it didn't touch him directly here, but if you see this white bordered candle right here, this is not what I would call as an igniting candle. This is basically an ending volume, right? So this is what we call as an igniting volume. This is what is an ending volume. Although both are white bordered candle, but this is happening after an extended down move, and this is happening at support, right? So and this is happening at resistance. So any candle which is basically, or any move that is happening at the particular at the change of the trend, you call that as the igniting volume, right? So here, when you see this particular candle right here, this is what you can call as an igniting volume, just because it is igniting a move in a new direction, which is different from this move right here. But if the same candle you spot here, right here, this is not what you would call as an igniting volume. This is what you call as an ending volume, only because the stock is in massive uptrend and you see this huge volume spike right here, which means the stock is having, or it can see a potential reversal, right? I hope that makes sense.
Are you talking about climaxes?
Yes, to an extent, yes.
So, igniting volume, does it have a reference that it should be greater than or before, greater than the previous candle or something like that?
Yeah, so you can, I mean, of course, when you are doing analysis on a weekly time frame, then of course it makes sense if it's greater than at least two or three candles from its previous thing. But of course, I do not place a lot of emphasis on the volume here, the actual volume number, rather than the candlestick or the candle. So although you can see that this particular candle is lower or almost at the same level, so as long as it's at the same level and not significantly less than the candle volume of the previous candles, I'm good to go. Yeah,
Okay, thanks.
yeah. So I hope this at least like answers few of the things, which means that whenever you see a white bodied candle at support, that might kind of sorry, white bodied candle at support means a green, not green, sorry, red candle at support, which means this can indicate a trend reversal, which is oftentimes seen as nifty as well. But let's not go to index right now. So this is just one example. If you take into any other stock in consideration, where you see any, I do not spot here. Can you name any stock which is having significant like selling pressure? I don't
Arvind Fashions.
know. Okay, so here I think it's slightly different, but yeah, let's see. So this is where it opened. So here the volume is not supporting, right? So as you can see, the average volume, like let's ignore this part, or we can start with this part also. I think that's okay. So this is the volume that you see here, right? With this candle, this is basically, or even the previous candle right here. This is what you can call as an igniting volume, and this is what you see at support, right? So this is just one candle, so it doesn't make sense. It doesn't fit into criteria. But let's say if you treat this as a support right here, so this candle that you see right here, this is almost we can call it as an ending volume right here, but this is doesn't have a lot of volume right here, right? Because the volume that it was using to fall right from here to here, it is not at the same level of the volume here. But actually it is, I disagree the previous point. So actually it is almost at the same level of the previous volume, but here as you can see, the volume pressure or the selling pressure is super high, which means that this zone is not at all preserved, right? So which means that once it breaks a particular zone, no matter what the volume here, then there's a huge possibility of trend reversal. And I think this is a very outlier case, because here the also it's also closing below its like open or whichever the listing price. So let's look at some other thing which would make it more clear. Okay, very less volume, not liking it, but let's see. So here, yeah, that's a good example. So until here, the trend was an up move, and started as down move right here. But the volume which it is falling in, I think is not visible if the volume is more or low or less. So it doesn't make a lot of sense. Won't be able to explain, but let's try anyway. So this candle right here, which I would call it as a igniting volume, which is igniting a move in a new direction. And based on what I said before, when you spot this particular candle right here at support, because this is the previous support that you're looking at, then this is basically an ending volume, right? And as you can see that the buyer started stepping up right after this candle. So people might go short, and this is what retailers do a lot of time, where they spot this candle at support and see, okay, let's short now because the support will definitely get broken, and will make a lot of money. But this is exactly when the buyers step in, because people who were short before, they start covering their positions. There's valid in options, but overall in real life also, wherein like people who were short before think that okay, there's a good place to buy the stock because there's a buying zone now or a demand zone now, and and whoever wanted to exit the positions exited or unloaded until this level, right? And whenever this particular zone is broken again, which is right here, which greatly which completely reverses the trend of the stock. So when which means that this particular zone is super important, and this is when the buyers start coming in, but they're not able to sustain this particular price zone, and the sellers were still dominant, which means that there was still selling pressure. And once it broke this particular level right here, wherever it was 6th of August, then it is not able to close above this anytime after that until November, which is almost 3 months, right? And whenever it broke above this, it broke above this with significant volume, or it took a lot of buyers to basically uh, close above this level or just push the price up above this level. So here, once the first time I closed below this was 2nd of July, actually it's July to November. And here you can see there's a fake out, but not exactly fake out, it's a breakout. But there was still buyers, a lot of buyers present. And every time buyers started to push the price up or try to break this level, they're not able to do so. And the price started moving or falling from here. And until this, where it closed above this on a weekly time frame, and then you can see the trend changed for a while until whichever thing happened here until this level. So yeah, so of course, when if you take into consideration the previous thing here, so until we are bullish until this particular candle. Once we see, so again, this analysis is happening on a weekly time frame. When you see the candle is closing below this level on a daily time frame, then you should be watchful of your longs and start wrapping up until this thing is broken, right? And once this is broken, then of course you can just think of the trend is almost already reversed. And the same thing here. So this was the earlier reference point, but this is the most recent reference point that you can look at. So this would give a better idea. Once this low is broken, you can start wrapping up your longs right here. And from here to here, you'd if an experienced trader would wrap up all his longs from here to here, basically. They won't wait from here to here just because their first reference candle was here. So now this becomes a reference candle and it starts shifting out. All right. So I hope this makes sense.
Was there anything you wanted to mention in the stocks which you listed out?
Not particularly which this. Okay. Yeah, so this is just for your analysis that we can apply the concepts that we learn here, so that same page, right? So here, yeah, you can still use the same concept here in happiest mind. There's a white, super white bodied candle, which also greatly increases your risk, which means that you can't wait until this level to be broken to cover your longs here. So you have to watch fully here. But yeah, I am bullish on the stock as long as it sustains above this level, which is 547. And this candle happened on 15th of Feb, like that week, and we almost 1 month in. And it's not, and it is retaining this particular level, which means the stock is still bullish. But I would think of yeah, so when you see this kind of candles, right, you can move onto a shorter time frame, like daily, and see if you're able to spot a white bodied candle right there, right? Which means right here. So this is another candle that is spot here, but this is also there. So yeah, I mean this candle is there within this level. So let's ignore this one. So here itself, you can plot another line, and you can see that okay, although there was selling pressure here, so until it stays below this, my trend is kind of bearish. But as long as it holds this level, my trend is still bullish, right? So instead of treating this as a stop loss, you can treat this as a stop loss, because this would definitely imply a trend reversal in this case. And you can go long right here. So from here, which is 536 to 506, your stop loss is 30 points, or almost whichever, I think 7%, 6, 7%. And your target would be at least 15 to 20% here, since the stock is trading at 80h, almost 80h. And this kind of also gives a flag pattern, but I do not look at patterns and do not consider patterns at all. But yeah, so you can expect a breakout from here and until wherever, as long as it retains and stays above this level. Yeah. So you can also combine this point with the previous point which I mentioned, that longer the stock stays at one place, the stronger that support becomes. So this kind of hints it is a support, but let's consider this like this is a support zone. So as long as it is above this level, I'm still bullish. But as long as I mean, as soon as it closes below this level, the support zone, I become bearish. Yeah, I start wrapping up my longs right here. So I hope this gives a decent idea about how to approach these things, and I think we can also look at voltas. So voltas 1 week, yeah. So yeah, you can see the rejections that happening at the open of this candle, right? So it's not able to. This was in 15 Feb again. So for the entire month, it is not able to cross this level, which means that you can either sell, call, or whatever buy put from this level for monthly expiry and still make a lot of money until this level, basically. And if it breaks this level, which also coincides with this candle's close, so this level becomes super important for us to watch out for. If either it consolidates at this between these two zones, or if it breaks this. If it breaks this, then there's a chance of trend reversal. Chance of trend reversal is not reversing the trend, but chance of trend reversal, and you can start wrapping up or trailing a stop loss if you're short. And of course, you won't go long. There's no I do not see anywhere we can go long in this case. So there's like a neutral candle. There's like huge selling pressure, right? So this candle is kind of the trend setter for the future candles that's coming in, and this is happening on a weekly time frame, right? And until this candle, these two candles are the trend setters. But after this candle came in, it kind of like just overshadowed this candle, and now this candle like took this position, this candle's position, and this kind of coinciding same level. So this level becomes super important. So that's the reason I think I shared this talk, that this might give some good entry on a daily time frame, depending on what you're seeing. So if you see from here to here, it was a very good shot, because from here the next support, not support like of course support is right here. So here if you see the stock is opening, I mean the opening goes to high, then it goes short till this, right? So this can also be a decent intraday trade, I would say. And there's a volume spike, which implies, of course, this is not an extended down move. So, so the concept I was saying before was basically thing about igniting an ending volume, right? So would you call this as an ending volume? If you understood what I said before, anyone?
No, but igniting would be at the resistance, right? It ignited a new trend or a short term
Right.
trend.
Yeah, but that igniting the trend got ignited right here, right? It didn't get ignited here. It's still the trend is
Yeah,
bearish since here, since 1 month, not right here.
yeah.
Right. So would you call
So
this candle as still an igniting candle or either an ending candle, whatever?
it would be an ending candle then, right?
Why would be an ending candle?
Because the trend was ignited at, I guess, 15th of Feb.
So between this candle and this candle, which candle would you call as an igniting candle?
Yeah, obviously the first one. It's a
Right.
white bodied candle. No, the second last candle.
Right. So the reason, let me repeat actually. So ending candle or the ending volume, not the ending candle. Ending volume is basically the volume that is ending after an extended move at support. Right. So this is that support. There's almost support zone right here. And when you see a candle with a huge volume spike, that is what we call as an ending volume, right? And when you see this candle right here, which is igniting a new move from here to here, this is what we call as an igniting volume. And this should happen at resistance. This should happen at support. I hope this makes sense.
So if this is the ending volume case, then
No,
why
I
do you
did
say
not.
that you don't see an opportunity to go long?
I don't see an opportunity to go long here. right?
Oh,
So from here to here also, it's almost just 10%. That's not what I look for. At least 30-50%, as I mentioned. So from
okay,
here to here, I won't go long until this high is taken out, right?
okay.
Yeah. So yeah, I hope these concepts are clear, and it makes a bit of sense and help you like refine your setup basically. Uh, so I think we can talk about a few more things if that would help. Uh, One is that so whenever you see a correction, right? So correction, there are two ways to correct a stock, or or when I say correct the price basically. So one is correction can be either through like time, which is when the stock is consolidating, or the correction can also be through the price, right? So the price, by mean when the stock is falling, it's coming at a support zone. Buyers step in, they start buying, which means the stock is corrected and someone start buying, which can be seen here, right? So actually, there's not a huge 645 to 490, but let's consider it still. So here you can say that okay, stock corrected from here to here because of the price, right? But from here to here, 1 second. Let's look at something which is more wide. This doesn't make sense. Mm, okay, let's come here anyway. So so you can say that stock hit supply zone right here, start correcting, fell like whatever 10-15%. And this is what we can call as a correction through price, which means that sellers start coming in and push the price down, and this is where the buyers start coming in and give a buying opportunity, right? And this is a good buying area or the demand area where you can start buying the stock. And the same thing can also be observed when in the case of time, right? So when you say time, which means most breakouts happen through consolidation, as you might know. So I think one example would be this Johnson Controls, where so when you look at this right here, so first from here to here, you can call it as a correction through price. So from here to here, where the stock corrected because people start selling the stock. But from here to here, the stock corrected, or the stock, from here to here is also correction. Actually, I mean, consolidation can also be called correction depending on where the move is happening. So from here to here, the stock corrected you through time, right, before giving a breakout. So people can start buying, the buyers can start coming in at least even here, either of this place or this place. So both are equally accurate, and both can be called as a correction. It's not like you say there's a correction happening only when stock is falling or only when index is falling. When the index is like moving in a range, that is essentially also a correction, because there are sellers and there are buyers, and whenever someone is selling a stock, someone is buying a stock, and there are a lot of fighting happening between them, and whoever wins, right? So yes, we these are basically two types of correction that you can take into account, and do not short a stock just because it's trending at or just trading at ATH, which is I showed an example, happiest minds, right? So here the same thing is happening, wherein this is nothing but a correction that's happening right here, wherein there are both buyers and sellers, and sellers are unloading the stock, buyers are buying the stock, whichever, and it can either give a breakdown or it can give a breakout. Excuse me. And depending on the price action, whichever you see, whichever want where you want to go, you can either take a short position or long position right here. So these are other two concepts that you can take into account while trading. And I do not want to overburden you guys with a lot of things, because the things that I mentioned is like super heavy when you bring in or apply into your actual trading system. Although it appears simple here, but if you consider this here, or move this line from here to here, it might change your support zone or change your stop loss or the target rate. So it's super important to learn how to plot that properly before actually taking a trade. Plus, you can always better your setup using uh, practice basically. Unless you do that, you will not be able to modify this or help your case. So here I want to introduce another concept which I use in unison with these things, which is RSI. We haven't spoken a lot about this, and I also used exponential moving average 200 only. Sometimes not a lot, but just there on the chart. See. After it disappeared.
No, it might not have 200 days, I guess.
Sorry. Okay, yeah, makes sense. Yeah, let's look at some other stuff shared. Let's look at Team India. So it's a very simple thing with exponential moving average. Right. Right. So it's a very simple thing, as you might be seeing here. I think with 200, and that's the only thing I use. So whenever a stock touches 200-day moving average, right, it's super important. I mean, that area, that particular range or region itself, it's super important, and it would take a significant amount of either a buying or selling or some major event for the stock to touch that level, right? A 200 moving average. And whenever it touches that, you will always see an explosive move either in the upside or the downside, which is, I think, visible, and you can like check it out with any stock basically, except Tower. I don't know what's happening there. But in this case, if you see, like, whenever the stock is falling, it corrected from 20,500 until here, whereas the next support 18,000, almost 20%, right? 10%, sorry, from year to year, right? So, but the buyers started coming in and basically retained control and then push the price up. So, which means that whenever a stock is trading above their 200 EMA, which means that buyers are in control, and they would do anything in their power to keep the stock above that level no matter what, which is the reason you see all these things right here, where you see that, okay, you there was a huge selling pressure from here to here, but the buyers came in and gave this huge engulfing candle to close above this 200 EMA. Of course, there's a lagging indicator, don't use it a lot, but just as a reference point right here. And the same case here, right? So as I explained right now, that there are two kind of corrections, either through time or price. So from here to here, it already corrected through the price, but from here to here, whichever the correction was happening through time. Which means whoever wanted to sell, they exited the position right here and gave away to the buyers to kind of like buy the shares. Yeah, and although it was trading below the 200 EMA, but the stock was still correcting, and the buyers were looking for a way to basically push it above 200 EMA. Yeah, and once it went above that, from 4th November to until this 26th Jan, I think 3 months, it never like went below this, right? Which means the stock trend is bullish. Not, I call it a trend, short-term trend maybe, but not long-term trend. Is bullish. And every time it has come here, it is like almost given explosive move, right? So this is something that you can look for or consider while modifying your setup or just taking trades in a direction. I think if you consider Dabur or there's another stock I'll just share, then it's like almost like moving and touching this constantly, which means it's like still like consolidating, but buyers and sellers are not very sure which direction to move. So first time from here, if you consider your 461 to 527, it's like 10%, right? Almost 10% is moving since almost like 1 year or 10 months and or 8 months, whatever. I was not able to like move ahead of this. So here in this case, it becomes pretty useless, wherein like you see it's coming here and moving some, but and bouncing off from here, but it's not super relevant because the stock is as such. So here again, the filtering mechanism comes into picture, wherein like you only pick stocks which has a good potential for upside or downside. and you kind of ignore the stock because the stock is basically not moving anywhere. So if you just take this thing broadly, like from here, right? Yeah, so from here to here, like first time I came, it came at this level was here, 14 July. Like ignore this part. From 14 July until this 20th December, like almost 6 months time frame, it did not move, came back again to this zone. So this is what we can call it as a consolidation and kind of correction through time. But again, I hate this stock. So anyways, but yeah, so you can ignore such concepts in this particular stocks. When you see that the stock is consolidating, it's not moving anywhere, basically. And I think the same is visible in Reliance Capital, which is, I thought it's a very good trade, but apparently not. So if you see this breakout right here, right? So let's take monthly. Monthly, of course, this will differ. I'm just talking about daily 200-day EMA. So just look at the stock, right? So it's almost trading at its listing price right here. And it is also near its 200-day EMA. And it kind of tried to break above this after, I don't know, God knows when, like since forever. It hasn't moved since like 5 years or 4 years, whichever time. And now since a very long time, after a long time, it gained enough momentum or enough strength to at least touch this level, get to this 200 EMA, right? Which means that we could have seen a good move, and there's still a possibility of getting a good move in this direction with the new next resistance being 27.10. So here, if it continues to close above this on a weekly time frame right here, then this would have been a very good trade to go long until 27, which is basically 100% returns, and I don't know how long, but very good. And of course, look at this setup, this excellent setup. So in this case, I think 200 EMA becomes very important, wherein buyers started to push the price up when they see an opportunity, but sellers are still dominant. And of course, as I mentioned before, if the stock is trading below 200 EMA, then the sellers would try to keep that same thing and maintain the inertia. And if it's trading above 200 EMA, then the buyers would try to maintain that inertia. Yeah. So yeah, sellers came in, started pushing the price down, and it might bounce until this, and then we'll see what happens here. But there's a very good possibility that it might break out from here, from right here, or from here, within next week itself, and we might see a good move. So here, I think, I don't know, there's a cup and handle, whatever you can call it, but I'm just talking in terms of purely technical analysis, not in terms of setup. Yeah. Same thing was visible in TV Select, which I booked like 80% returns almost. I shared this 2 months back in the previous mentors. So this was a brilliant setup actually. Yeah. So yeah, right here. So kind of same setup wherein like you see that it's trading near 200 EMA, which means that it's consolidating kind of and moving in this range since a very long time. At the same time, you see some volume contraction happening. And once it broke out of here, it's like hit upper circuit right here, 7 December. And from here, your next target was basically 138, 100 to 138, easy straight 40% profit once you see this close. But yeah, once you see this close, you can still see that it is not able to sustain. So you can either wait until this thing is taken out, or wait until this price action where you see that okay, after after the sellers try to push the price down until this level, buyers step in and move the price up. But since there's overhead resistance, took resistance, came down again here, 200-day EMA, huge up move, right? And once it broke again, right here, you see there's a huge another 70%. Yeah. So from here to here, you can book like easy 70%. And this was a very good zone to buy, basically. So this was a supply zone before, wherein there were a lot of sellers. But after it broke out here, now it became a demand zone, wherein like it's a good like playground for the buyers now. And I mean, here I just read about the news, which is not following before. And the reason this happened was because I think they did some management changes and just segmented this company into a new company, basically. but that's secondary and that's not something we look at for trading this. So here again you can see that okay, it is not able to sustain above this and came back to 140, which is again a good buying zone right here. Just ignore this volume, this candle, right? And here actually you can see the concept of igniting and ending volume. So here this is what we call as an ending volume, which came at support after this extended down move, right? So here the buyers expected to set up because whoever wanted to sell, they already unloaded the positions, and the buyers would kind of like take the reins from here and just push the price up or do whatever they want. Of course, this is only a probability that that will happen. So you have to always look at the price action and other stuff, other indicators or whichever setup you use. But overall, there's a good possibility, and the risk reward is very good if you buy here. And in this case, you can ignore the candle and just ignore whoever says okay, there's like huge selling pressure because there's a buying zone. There's not a selling zone anymore. And from here to here, 140, 170, you can see another like 15% or 10% move from here to here.
What are the
So,
things will you look at here to confirm that this is a buying place and not it won't fall on any further?
so here, this is where the RSI comes in the picture, right? So here, RSI is basically, I look at the band. So if the RSI is above 60 or just about to reach that, then this becomes a very like super bullish setup for me. But overall, ignoring the RSI, I think that's again lagging a bit. Yeah, just ignoring the RSI, once you see this particular candle, right? You can go long right here with a stop loss like 1 or 2 rupees below it because there's again a support zone, not exactly support line. So just 1 or 2 rupees below it and go long as this is a retained. And just purely talking about this thing, the price action, this is a very good setup for going long. I hope that makes sense. And if you combine the concept of Lumia Man here, which is basically just going long, watching some white green candles, which is a good like white bodied candle, then you can use that as going as an indicator for going long as well. Yeah. But that of course is not needed in terms of wide. I mean, it has to be wide if you know how to read the price action chart. Yeah, I hope that makes sense.
Yes.
Great. So yeah, this is it right here. Have yeah, actually, let's look at Tata Chemical because so this is also a very good setup for going long. All this like right here. Right? So, but this is happening on a daily basis, and this is only like the second candle. So there's not like an extended down move. There's just like igniting candle, you can call it. But if you're a high risk trader, you can use this candle's close as support, and you can basically buy Tata Chemicals at open tomorrow. And it might, and your stop loss is very small here, when you can just keep 2 or 3 rupees because 730 is a good support region here. And people might go short looking at this particular candle, but of course, the volume spike or the bullish candle spike that you see often after such candles is basically just buyers coming in at support zone or just keeping the price constant. Yeah. So here, if you're a high risk trader, you can go long right here. That's, I hope the green candle is visible. Sorry, green line. Yeah. So this is the daily time frame. So of course, this the trade that we're going to take is an intraday trade because the analysis is on a daily time frame. So you can go along with this as the stop loss 728, and you can aim for this as a next target, which is 750 from here. So one thing to notice is that it broke this this candle's open, and now this candle kind of becomes a reference point, right? So whatever price action happens within this candle still has a bearish flavor to it rather than the bullish flavor, although it is trading above this candle. But as soon as the price falls below to 728, the trend, there's a huge possibility of the trend reversing because one, this is a reference candle, and the candle that will be forming below this, so the trend will be bearish. Second, it's like coming into our domain, or just the way of this candle, right? Breaking this candle. So from here, your next support can be here, and from here to here, the fall would be like I don't know, good at least 10% or 5 to 6% at least. Yeah. And of course, this would be called as an igniting candle. Right here, you can see some volume spike. So, but we cannot give a confirmation because RSI is not super in our favor. RSI above 60, so we're still like kind of bearish. So that's the reason I can take a buy side trade here, because my RSI is saying that okay, the trend is still like bullish. Sorry, trend is still bullish, so we can take a short term trade on the buy side here on open tomorrow, which is of course high risk trade, but we can take it. Yeah. So this is for Tata Chem, and now we can look at Siemens. I hope this is clear, like what I'm trying to say here.
I'm still confused that when you decide a support from support, you should go long, or when you decide when you're supposed to go short. Because half of the things you said that are saying that we should go short, and but you're saying that because if you want to take high risk, you should go long.
Yeah, so I said, okay, let's start from the start. So the trend, let's use this as a reference candle right here, right? So as long as our stock price is above this candle, my trend is still bullish. Right? But this shift, our reference changes to this candle and this candle, because these are also white body candles, right? So if you use this as a reference candle now, and you see this open is broken or taken away by this candle, which means that there's possibility of trend reversal, right? But all these things are happening at support, which is a previous candle's close right here, which is still a reference candle, but you can just like create layers in your mind while analyzing this, right? And all these price action that's happening is happening within this candle's body right here. And let's move from here to here, which is another white bodied candle. You can see here that there's a huge sell off happening, and this candle closed below this candle's open. So there's a possibility of trend reversal right here, because this, according to this reference candle, this candle is dominant, and there's a huge selling pressure right here. But again, this thing is happening at support, right? And since we are analyzing this on a daily time frame, we cannot expect this to move the same way on a daily basis, right? Because on a weekly time frame we can expect the movement in a daily time frame, but on a daily time frame we can expect movement on a shorter time frame, which is either 75 minutes or 15 minutes or 25 minutes or 30 minutes, whatever. So you can definitely take a buy side trade here, which will be high risk, because we see a lot of like selling here. But at the same time, you can take a long side trade because this is at support. RSI is above 60, which is still like on a positive side, and that's the reason it will be high risk. And thirdly, you'll take this trade because the stop loss would be very small, which is 2 or 3 rupees. Right. So in this case, if you want to YOLO, you can go along on an intraday basis, just because we are doing the analysis on a daily time frame. Is that like better than the
Yes,
previous?
yes. Now understood. Thank you.
Great. And just to add another concept of like again igniting and this thing, right? So this is an igniting candle, as I would call it, and we wait for a few more candles to come here until we call that as an ending volume. So this is an igniting volume definitely, or you can even call this as an igniting volume, but this would be a better one. So, but it has to cross several layers of support before it comes to an end, right? So here in this case, we have to find where our actual support is. So the good amount of support I see here is at this level, which is 550, which is like massively, like it's I'm basically super far from where we are right now, right? So until this reaches here, this level, or even this region, which is 583, 590, which is still doable. So until we see these white bodied candles until this level, we won't call that candle and as a ending volume, right? So if you see the same candle here, right here, this candle. So this candle is here, let's say, and then we can say that there's a possibility of trend reversal from here because this is happening at support, and whoever wanted to sell their position already exited from here to here. Makes sense? Yeah. So, and whichever candle comes after that candle, so this candle is coming here, and after that, whichever candle we see, that candle would basically mean an igniting volume in a new direction, because this is an extended down move, and after that, we can expect an up move from here to here, which is 680. So from 580 to 680, 100 points, I think it's a decent 12%, 13%. Yeah. So yeah, this is basically what I follow most of the times for like whichever trade I take. I mean, I can keep adding more layers to it to refine the setup, and that's what I do before taking a trade. It just would be too complicated for you guys to understand right now. But of course, you can practice with this and come back to me if you have any questions. So same thing here, right? So spot the widest body candle, which is here, and this was on 1st of Feb for entire month. Trend was bullish, so you can sell puts here until uh, wherever you want, basically. And until this low is taken out, then you can start like covering your position, or depending on your risk to reward, you can book 10%, 20%, whichever you want. Yeah, on a monthly time frame. Yeah, and then you move back to a daily time frame and look at like this support is about to be get broken, but that's not super obvious from the RSI, although it is decently obvious, but not super obvious. And it is very far from 200 EMA, so it's we can't consider that as well for this particular trade. So let's draw this another. So the reason I drew this is because this becomes a temporary support zone. The reason I call it as a temporary is because it's on a daily time frame, not on a weekly time frame. And once you take a, of course, this is kind of inconclusive right now because I do not know what's going to happen. But overall, the trend seems bearish to me here. Until this, but until this thing is taken out, I won't go short. And even if I go short, I'll go short until this candle, which I plotted before. Yeah. So from here to here, or this, hang on. Yeah, this was not the candle here. So as soon as this candles, this support zone is broken, I can definitely go short until here, right? That would be a very good trade. And this kind of also indicates some bearish divergence. From here, you can see here, and like come. So this is basically a confirmation for taking a short side trade, but whichever move was to happen happened from here itself, where you see that it's like coming below 60 or falling below 60, which means that if you wanted to enter this, you could have entered right here, or even in this bullish candle when everyone was buying, you could have shorted the stock. And after that, I mean, use this high as a stop loss and just keep shorting. So that's also apparent here, but like just try to add more confirmation to whatever you are doing here. So here in Siemens, of course, this looks like a decent setup for shorting below this with a decent 15% return, 10 to 15% return if you're trading options even more. And I will see, I mean, you can keep tracking and see like how that goes. But of course, like keep an eye on for these candles as well, where this thing is there. So until it's trading above this, my trend is still bullish, and I should be watchful of taking a short side trade. Yeah. So this is Siemens. Gland form, I think is like I just like the chart, like how it's moving. It's like a spring, so it's okay. Yeah, taking support and then moving. So the same thing. Like you can see, if you treat this as your reference point, then it's not able to break this. So whatever price action is happening below this, and this candle can be called as a fake out candle in the hindsight, because although it closed above this on a daily time frame, but next to itself, it opened cap down and fell back on this candle's like weight. Yeah. So now, unless this high is taken out, this thing is taken out, I won't go long on this stock. We'll just client farmer 2717 right here.
You wait for the daily candle to close for confirmation, right?
Yes, most of the times, and that's what I recommend unless you want to take a high risk trade.
So
That
you take the trade end of the day or next day 9:15.
completely depends on. I do not take the trend at the start of the day. Never. Like I kind of take at the end of the day or midday if I'm very sure of the trend. Yeah.
All right.
Yep. So this is Grand Pharma and 2716. This kind of becomes a short term resistance zone. Again, this is a very poor description of a zone right here. But you can use this still as a reference point before going long or short. So as long as it stays below this and above this, you know what to do basically. Nifty Auto, I think it's like I don't know, it's a weird stock, weird chart. Mm, so weekly. So weekly, my trend is still like kind of bullish, but when you start seeing multiple wide-bodied candles at succession, right? Then you have to kind of consider and try applying other concepts that you have in mind, which is the case here. So, and of course, the case will be there in Nifty because you see a lot of buying at one day and selling another day if it's a trending day. But you can ignore this candles completely if you are considering this white body candle, which is here. So yeah, so when you start seeing this in succession, this kind of like you should start looking at the chart at a more granular level, which means that if you see this green, lot of red candles at succession, which means that there's a lot of selling pressure and the buyers are not able to take control at all, which means the overall broad term of this particular Nifty auto itself is very bearish in the short term because not short term, we can say it as a medium term is very bearish. And shorting below this would be a very good trade. And we do not have to wait until this particular low is taken out. We can short even right away from here after this low is broken because we see all these candles, white candles in succession, and it is kind of in between the reference candle of here. So this is also whiteboard candle. This is also whiteboard candle, but here it's like still a bullish candle. I see a lot of wicks. So it is. I would say it's like 80%, 85% bullish, but still like 15% is like people are not sure about the move here. So overall here, I would say the trend looks very bearish to me. And you can look at the individual stocks which comprises of Nifty Auto and try finding similar patterns and short a couple of them. Mahindra or maybe Maruti. Maruti I think I already saw, but yeah, Mahindra you can see. So here I can definitely go short, and if I'm a highest trader, I can even go short right here because to me it seems very certain that there will be a good fall, and until this level or the next support zone, which I see next support area, which is this one, 9787. So we can see some decent amount of correction, 300 points or 30% connection right here. And if you go on a daily time frame, you can see here as well. So from here to here, it will be a very good short that you can take. And you can see also watch out for the amount of rejections that happen right here. So try to broke above this level, did break above this, consolidated for a while, but sellers were in heavy. So they push the price back down here, and like most of the times it's trading below this. So this is like a super important zone now. So I think same can be visible in Mahindra if you want to see, and I think that might be a good trade to take in FT Auto. So see. Not exactly, because look at this candle right here, right? So here it's still like holding it. So I'm like still not very certain of taking a trade, a short side trade here because it does not seem very like appropriate here. But I think there might be other charts which seem more weaker than this. But this is still like decently strong to me. I do not see a trend reversal in this the short term, but that might be possibility that might change depending on how this. And talking about RSI is still like supportive when stagnating above 60, but still having some bullish thing, which is there. So overall, I won't short Mahindra right away. I might short if it tests this level, but not right now. Yeah. So I hope that's clear. And unless you guys have any questions, I think we can wrap it up here.